If you have a 401k, an HSA, or even a regular brokerage account, chances are you're about to leave money on the table before December 31st. Most people think that the financial end of the year is April when you're filing taxes, but the best money moves are actually made before the end of the year. I'm Kevin, a certified financial planner, and in the next few minutes, I'm going to go over my top 10 money moves to make before the end of the year. Number one, capture your full employer match. So this is just something that really pains me to see is the amount of people forgoing literal free money just because their contribution rate to their employer-sponsored plan isn't high enough and they're not getting that full employer match. So if this is you, we still got a few weeks here left in December. I want you to go in there and I want you to increase your contribution rate. That way you're at least getting that employer match and that way you can maximize on free money. Number two, check your FSA balances. This is where people are accidentally donating back to their employer. An FSA is a flexible savings account. It lets you pay certain expenses with pre-tax money. Here's the key. Many health FSAs are use it or lose it, but employers can offer a carryover or a grace period. It is plan specific, so double check with your plan. For 2025, the maximum amount that you can carry over is $660. Go to your benefits portal, check your balances, and schedule your eligible spending now. Number three, the HSA. If you're eligible for an HSA, that's awesome because it's one of the best accounts in personal finance. HSA stands for Health Savings Accounts, and you may qualify for this if you have a high deductible health plan and meet some other eligibility rules. It's triple tax advantaged. You can usually make HSA contributions until the tax filing deadline, but that does not include extensions. There's two moves I want you to make here. First, I want you to contribute, even if it's a small amount of money, and if you plan to leave the money in there for a long time, I want you to make sure that that money is invested within that HSA account. Number four, tax loss harvesting, and I'm going to keep this easy and beginner friendly. If you own investments in a taxable brokerage account, and say you have a stock that is trading at a loss, you can sell that stock to offset your gains. And you may be able to offset actually $30,000 in ordinary income and then reinvest back into the market. However, you need to be aware of the wash sale rule, which basically says if you sell a stock and then try to buy the same stock or a substantially identical stock 30 days before you sold it and then 30 days after you sold it, basically it's 61 days total, this can disallow that loss that you're trying to capture in the first place. So make sure you know the rules before you do anything. Number five, before selling anything big in your taxable brokerage account, I want you to take a good look at your realized gains for the year because so many people overlook this and then they have a huge tax headache come April. Remember, a realized gain is when you actually sold it and you locked in a profit. Look for your broker's realized gain report. If you can't find it, maybe contact them or just search realized gain report in your broker's search bar. Number six, if you donate to charities, do it intentionally. In general, most people don't realize to deduct charity contributions, you need to itemize deductions. If you already itemize, donating appreciated stock can be powerful. You may be able to avoid capital gains and also get that deduction subject to rules and limitations. Charitable donations are usually deductible in the year that they're made. So if you want to account for this year, it needs to be done by December 31st. Number seven, double check your Roth IRA contributions. If you don't know already, the Roth IRA is one of the most powerful accounts out there. It's pretty easy to qualify for one and pretty easy to set up one. If you haven't already, I strongly recommend you look into it and get one set up as soon as possible. The great thing about the Roth IRA is that you're actually not stuck with that end of the year deadline. You have until tax filing to make those contributions for the current year that we're in now. So if you didn't maximize your Roth IRA for the year, you still have until about April to make those contributions for now. And I strongly recommend you do that. And a little extra tip, there are, of course, income limitations to the Roth IRA. So double check those income limitations, and if you're pretty close to them, you may want to double check if you are allowed to directly contribute to that Roth IRA. And if your income is higher than the allowable limits, you may need to look into a backdoor Roth IRA, which again, it sounds scarier than it really is. Number eight, if you or even your parents are in RMD territory, double check that it got done. RMD stands for Required Minimum Distribution. It's the age where you are required by the government to take out a minimum minimum amount from your retirement accounts. The RMD age is 73 or 75, depending on what year you or your parents were born. RMDs are due by December 31st. However, for your first RMD, you are allowed to push that back until April 1st of the following year. Note that I said April 1st, not April 15th. If you do delay that first RMD, understand that you're going to have to take 2 in that next year, and that can significantly increase your taxes. Number 9, do a quick tax check, your withholding, your income, and make sure that you're on track. Think of this like the pregame, so that way when April rolls around, you're not freaked out or jump scared. You can often avoid an underpayment penalty if you've paid 90% of the current year tax or 100% of the last year's tax. 110% if you're the higher income over the AGI threshold. Number 10, make next year easier by setting it up now. Increase your retirement contribution in January. Automate transfers to savings and investing. I want you to rebalance your portfolio if it drifted. Make sure you double check your beneficiaries, especially if there was a divorce, a marriage, kids, or other big life events. All right, you guys, that is all that I have for today. Hopefully you did find this list useful. And again, it wasn't an exhaustive list, but these are pretty crucial things that you do need to get done here before the end of the year or before tax filing time. So again, if you found it useful, please leave a like and let me know in the comments below. Did any of these surprise you, or were any of these new to you, or was there anything that maybe you would include in your own list? Again, thank you so much for watching, and I'll catch you in the next video.